Small companies with turnover of 25 million and below are given the privilege of not deducting withholding tax where the person carrying out the transaction has a TIN number. When an income is exempt from tax, you don't need to deduct any tax at source. But where you deduct and you fail to remit, number one, there is penalty for failure to deduct at 10%. Number two, what you deducted and you fail to remit, you will remit. Number three, there will be interest at the ruling commercial rate.
We are looking at the Withholding Tax Regulations 2024 that was issued by the Federal Ministry of Finance. And we know that withholding tax is an advance payment of tax. We have with us Mr. Albert Folorunsho, Managing Consultant, Kreston Pedabo. He's with us to give us an insight or give us an overview of what this Withholding Tax Regulations 2024 is all about. Mr. Folorunsho, thank you for joining us on Tax Matters.
It is my pleasure.
Good to have you, sir.
Thank you, Amaka.
Sir, the Federal Ministry of Finance recently issued the Withholding Tax Regulations 2024. Please share with us the major highlights of this Withholding Tax Regulations 2024.
Okay, thank you very much. Withholding tax, to start with, is a deduction at source from payments made to beneficiaries like suppliers, contractors, and all that. So it is a tax deducted at source, which is just an advance payment of the tax liability of the beneficiary. And at the end of the day, to be deducted from the actual liability when the returns are filed. It is not a form of tax. It is just a method of collecting tax from certain payments. And most importantly, it is also a way of reducing the incidence of tax evasion in order to widen the tax base and ensure that all transactions are captured in the tax net. Okay, so that is a deduction at source, and that is what this Regulation 24 is all about. It is not new. It is just that there are quite a number of changes that have been brought into the existing provision.
So how is this different from the old regulation? What are the changes?
Okay, the first thing is that quite a number of the deduction rates have changed. Some have increased, some have reduced, depending on the transaction. For example, director's fee has increased from 10% to 15%, mostly to align it with the effective rate that is expected to be on personal income tax, so that when that is deducted, you probably don't have to pay any additional tax. So quite a number of rates have reduced, and maybe a few, particularly relating to non-resident transaction, non-resident companies transaction and individuals have increased slightly. Again, the penalty regime has been well stated for failure to deduct or deducting and not remitting. Okay, there is a different penalty for not deducting at all, and there is another penalty for deducting and not remitting. I'm sure we'll get into all of those. Number three is the fact that there are quite a number of exemptions now, which means there are transactions that are not liable to withholding tax deduction, source deduction of tax at source. There are quite a number of them, particularly when it comes to those specific transactions relating to sale of oil and gas, diesel, which, the expectation or the knowledge is the fact that the margin on them are very thin, and so government just want to reduce the incidence of claiming refund by the taxpayer. Okay, so if you don't deduct withholding tax at source, there will be no incidence of having to make a claim for deduction. And quite a number of those exemptions are there, which we can go into later. Another thing that has been introduced is the fact that when an income is exempt from tax, you don't need to deduct any tax at source, particularly when it has to do with a transaction with government ministries and parastatals and all that. As long as they are not liable to tax. For example, if you have a government parastatal having a fixed deposit in a bank, there will be no need to deduct tax at source because they are not liable to tax. And quite a number of other income that are not liable to tax. There's really no need to deduct any tax at source. One new thing too is the fact that small companies with turnover of 25 million and below, are also given the privilege of not deducting withholding tax, where the person carrying out the transaction has a TIN number, which means it's registered and within the tax net, and the transaction is below 2 million. Okay, so which means if it is above 2 million, whether you have TIN or not, the small companies still have to deduct. Okay, so that has also been introduced. Again, there's one other one where the person from whom the withholding tax is to be deducted is the one making the payment. For example, for insurance brokers who represent insurance companies, and most times they are the one that collect the premium from the insured and remit the premium to the insurance company by withholding their own insurance brokerage. Okay, so this regulation has clarified that the insurance company should not be obligated to make source deductions, since there's no source in any way. The source is the broker. The same thing also applicable where interest is to be paid to a bank, which is debited directly to you. You take money from a bank and they charge you interest, they debit your account, so you don't even have an opportunity of deducting it at source. Those clarifications have been brought by this particular regulation, among others.
Right. So has this regulation taken off?
Yes, even though it says that it will take effect from 1st of July by the letter issued by the minister, but that is not, has not been gazetted. Okay, so we expect that it will be gazetted in a couple of weeks or days, as the case may be. We don't expect the effective date to be different from 1st July, so one can play safe by assuming that it has really taken effect, except the gazetted copy now states otherwise. Of course, changes can still be made before it is gazetted, so it is the gazetted copy that is really the one that we can say is law.
Now, we are aware that you are a member of the Taiwo Yedede Committee on Fiscal Policy and Tax Reforms. We would like to know, is this one of the reforms that have been proposed by your committee?
Definitely is one of the works that have been done by the committee, among other things. Remember that the tax policy is being reviewed, the tax laws are being consolidated. We have the National Tax Administration Act and National Tax Act that cover all of the taxes, all of which are being reviewed. The languages are being simplified. Those are part of the work of the committee, but these are supposed to be part of the quick wins that we expect will have been published even before now.
You mentioned some transactions that this withholding tax has to be deducted from. So what are they and what are the revised rates? Okay,
if you look at royalty, for example, royalty is liable. The rate has not changed from 10% for company and 5% for individual. We have dividend. Dividend remain 10% for both individual and company. We have rent, hire, or lease of equipment. All those also remain 10%. The ones that have been reduced a little bit are those ones that are on supply of goods. Okay, general supply has been reduced to 2% from 5%. Then we also have colocation, all those ones that has to do with telecoms, towers. The margin on those are also deemed to be small. So for those have also been reduced to 5% for non-resident and 2% for resident entities. Then we have supply of services, that has been clarified and distinguished from professional services. For professional services, which are our technical services, those are services that require certification with some form of regulation and have to have attained some level of expertise, before you can classify such transaction as being, technical or professional in nature. That has been distinguished from just ordinary technicians carrying out technician work. Okay, so the rates have been also been clarified. For those other technicians, the rate has been reduced to 5%, while for the technical ones, they are 10% and 5% for company and individual respectively.
Okay. Now, I would like to know, are there transactions exempted from this withholding tax deduction?
Yes, like I said, there are transactions now that have been made clear that withholding tax should not be deducted. The first one is, regulated security transaction, registered regulated security transaction in the stock exchange. Again, real estate investment trust and real estate investment companies, their transactions are now exempt from deduction of withholding tax. Okay, and like I said, any company whose income is exempt, or any organization like the NGO and all that, their own income, not when they carry out transaction, they are also exempt from deduction of withholding tax from their transactions. We have, like I mentioned, CNG, LPFO, PMS, all of those have been excluded from deduction of withholding tax because their margin are deemed to be relatively very low, and those have in the past resulted to a situation where the taxpayer will be going back to the tax authority to claim refund of tax deducted at source. And of course, we all know what that entails. The tax authority will have to carry out investigation on the company, which can take a lot of both taxpayers and tax authorities' time. But if we can avoid it by reducing or by excluding them totally from withholding tax deduction, that saves a lot of time.
Small businesses are exempted from deducting withholding tax from transactions less than 2 million naira. So I want you to elaborate more on this.
Okay, so we're looking at small companies. Just like individuals are not more or less allowed by this provision too, individuals are not recognized or allowed to deduct withholding tax at source on behalf of government. They are not supposed to be agent of government, even though I know that there are some states that have started engaging individuals, particularly going to malls, relating to rent payment and appealing to them to deduct withholding tax from their landlord. But this regulation has clarified that you shouldn't be using individuals. Apart from this one that I just mentioned, every other corporate entity, even if it is an enterprise, a limited liability company, a partnership, a sole proprietorship that has a registered company, operating pay as you earn, even though it's not stated clearly like that, or government agencies, government MDAs, ministries, they are all recognized as agents of government for the purpose of withholding tax deduction, and they are to remit to the tax authority as at when required by the provision. That is, for deduction due to FRS, it must be remitted within 21 days of the end of the month, and the one due to the State Internal Revenue Services, it should be remitted within 30 days of the end of the month of deduction. So, as an extension of that, government is also looking at small and medium scale, small companies, as defined under Section 105 of CETA, that is, companies with a turnover of below 25 million and below, okay, and saying that if they have transactions with any company that does not have a TIN number, the small company will still have to deduct. Okay, if the transaction is above 2 million, the small companies will still have to deduct. But if otherwise, they should not deduct. That is, if the company has a TIN number and the transaction is not above 2 million, they should not deduct from those transactions.
You also said that there are sanctions for failure to deduct, and also failure to deduct and not remit. Please, what are these sanctions?
Well, there are multiple sanctions here now in terms of failure to deduct or deducting and not remitting. The first one, where you fail to deduct. Okay, the provision says that if your fault is that you did not deduct and you made the payment to the beneficiary, because the beneficiary will still file returns and pay tax, your penalty is just 10% for failure to deduct plus 1 year interest. That is interest at the ruling rate, flat. But where you deduct and you fail to remit, number one, there is penalty for failure to deduct at 10%. Number two, what you deducted and you fail to remit, you will remit. Number three, there will be interest at the ruling commercial rate, which is usually the MPR plus 4% that the FRA uses on the tax promax. So it's really huge. So those are the new provisions, okay? So they are trying to punish those who deduct and fail to remit more than those who did not deduct, maybe by mistake or whatever reason.
Okay. Okay, now, finally, before we let you go on this, what's really is the impact of this withholding tax regulations on both corporate entities and individuals? Okay,
so the major focus of this is that more people will be brought into the tax net because the deduction rate has been simplified. The objective is not just revenue generation. It's the fact that you want to bring more people into the tax net. So you don't want to deduct 20% and all that and all that. Apart from those that are listed as exempt now, all other transactions are liable to source deduction. And where it is not clearly in the schedule to the regulation, then you just apply 2%, which is the minimal deduction. So which means all transactions now are more or less captured, except those are specifically exempted. And with that, it means there's more revenue for the state and the federal government. And the tax base are being widened. Okay, the essence is that when you deduct 2%, that does not exclude the person from tax. So you still need to file your return, pay your taxes after deducting the source deduction that was made from your income. So it is expected to simplify, clarify. For example, there is clear definition of across the counter transaction. Any transaction that is not backed up by any, formal contract, and it is an instant payment either in cash or through electronic means. We can say that clearly that is across the counter. You can go to the mall, buy anything, or nobody will expect that you deduct withholding tax from those transactions. Okay, so that is a clear clarification, which we expect will make it very easy for people to know what is exempt, what is not exempt, who should deduct and who should not deduct.
Yes. Thank you very much, Mr. Albert Folorunsho. We really appreciate your time.
It is my pleasure, Amaka. And I hope that this will go a long way in ensuring and enhancing compliance with tax.
Of course, as the major aim is to enlighten the populace and also help to curb tax evasion as well.
Correct.
Thank you very much, sir.
You're welcome.